Welcome back, you lovely people. In today's episode, we're going to do the fourth and final part of our series where we're comparing our potential models as we look forward to the cycle peak. If you haven't seen the previous three, then on the channel, head to playlists and explainers, and they're all in there. So I won't go into detail on what each one is because we've done that already. But we've been looking at three models: the halving model, the KS model, and the logarithmic regression model, or also known as lengthening cycles and diminishing returns. Now, what I've done is I've plotted them on these flowcharts, and we'll step through them one by one and try and see what the key triggers are, and most importantly, identify if there's any areas where we may change our strategy depending on what we're seeing. So we'll start, and I've grayed out the ones that we're not focusing on to begin with, and then we'll try and follow the flow in terms of what that might look like on the charts. Let me just make this about the right size, a bit more, something like this. Yeah, no, a bit less. All right, there we go. That should be about perfect. So we're on our Bitcoin chart right here. We already have our launch pad highlighted that we came up with in one of our previous episodes. And we're looking towards the cycle peak somewhere between the green line, 19th of October, and the red line, 15th of November. So using that as our basis for these models. Firstly, scenario A. The price is approaching the most important trend line in crypto. As we take that out, we're looking to get into the launch pad. So price rises into the launch pad. The launch pad is named as such, and we have our rocket because once we get in there, and once we leave that area, we expect to launch to the moon, particularly if we're following the halving model. So once we leave the launch pad, our next target area will be somewhere around 80 to 120,000. I've done some calculations in the background. It is a broad area. As we start moving towards that area, then we will refine that range. But we are expecting to go there quite quickly. And that's also why it's a broad range, because when we spike in there quickly, it's much harder to pinpoint what the actual price is going to be. And then once we head into that area, we're expecting a pullback. Again, we have a very broad range, 30 to 60%. We know that in our bull market, we're expecting 30% pullbacks at any time. We know from the pullback that we've just had, which was 54%, so anything is possible. And the quicker price goes up, and in this scenario, the price is going to go up very, very quickly, and the faster it can come down. From that pullback, then we're expecting a V-shaped recovery. So that pullback to be very, very sharp. We'll look at some previous examples in a second. And then to quickly bounce out of that and make a new all-time high. If that sequence of events takes place, we are very much looking at the halving model. So if we look at 2017, the price action I'm looking at is right here. So as we leave the most important trend line in crypto, our launch pad zone will be somewhere like here in 2017. We start moving very, very quickly, heading up way past the all-time high, somewhere between $80,000 and $120,000. This was a 5-day correction, which was 31%. So between 30 and 60%. 5-day correction, and then you can see 1, 2, 3, 4 days we were back at an all-time high. Compare that to what we've just experienced with the mid-cycle shakeout, where it's been a number of months and still going until we make the all-time high. this happens very, very quickly. And once we make the new all-time high, then we're off to the races. From that point on, from the new all-time high, we had made the cycle peak in 3 weeks, and that was 150% gain in 3 weeks. So it happens very, very quickly. We'll quickly see if 2013 looked similar, and it does look similar. So we break the most important trend line in crypto. This area looks a bit different, and maybe we'll have something similar this time, but it looks a bit different to 2013. But the launchpad zone, being somewhere around here. And then from then, we went up quite quickly, or very quickly, took out the all-time high, and then had this correction, which lasted, well, in some ways it lasted 1 day. And the correction was, let's measure that out, correction was 27%. And then from the correction, we had made the cycle peak in 20 days. So about 3 weeks, the same as last time. And that was 338% in 3 weeks. So the price moves quickly, V-shaped recovery, and then up to the cycle peak. So that correction was 27%. So I'm going to just change this quickly and say that it could be somewhere between 25% and 60%. So if that happened, or that sort of action happened in 2021, then what we're looking at is, forgive my drawing, it's terrible by now. So we're looking to get above the most important trend line in crypto into our launchpad zone. Once we take off from the launchpad zone, then heading up somewhere 80 to 100,000. At this point, we're expecting somewhere between a 25 and 60% correction. So let's just say we're coming here, and then that to happen very, very quickly. And then the bounce to happen very quickly. And within 3 weeks would be at our cycle peak, whatever number that may be. In terms of the dates with my drawing, ignore them, just look at the shape. So we're looking for that sort of price action. If all of those boxes are ticked, we can be confident. I've put a red border around this box because this is where the key is. It's on this recovery. If we head up to here, what happens when we recover? We know that what happened in our mid-cycle shakeout is actually we didn't put in that V-shaped recovery and went sideways for a while. So we'll get to that in a second, but that's the action we're looking for. If that takes place, we're looking at a halving model. Let's look at our next scenario. That's going to be the KS model. And we're following the same path to start with, or I'm expecting to. We head into our launch pad, we accelerate up to between 80 and 120,000. We put in a good pullback, but on the recovery from the pullback, we don't do a V. We don't head up to the all-time high straight away. In fact, what we would do is consolidate for a while and eventually put in the all-time high, which the KS model is in May of 2022 is the target. So on the chart, I already have this KS model drawn in here. So we've had our mid-cycle shakeout. I've had this drawn in for a while and we're following it almost perfectly. We come in, have a quick increase to between 80 and 120,000. And this would line up if you remember the KS model, Ken is expecting us to put in that sort of high around or just before the 19th of October. And you can see how the price action might trick a lot of people. So if we're following this, people will be thinking that we're going up to 200, 300,000. We have our correction, 30 to 60%. And then rather than bouncing straight up and making a new all-time high, we consolidate. We'll probably have a small bounce and then come sideways. We don't know exactly what that would look like, but we've just seen from what happened in the mid-cycle shakeout, I would expect something similar to this before eventually going on and making a new all-time high. And the KS model, as I said before, is looking at May of 2022, and is looking at $500,000. So that's what that would look like. I want to do there's a slight variation on this as well, if we come back to this. So if we were to head into the launchpad zone and then launch to 80 to 100,000, and then we have our correction. Now, what happens at that point if perhaps we have a bounce, a dead cat bounce, we consolidate for a while, and again at this point we will be thinking that, oh, perhaps Ken's model is playing out. But what if actually that is the beginning of the bear market, and we put in lower lows, lower highs, lower lows, and then we have 1 year of a bear market? That is very possible. That would mean that our top would be somewhere between $80,000 and $120,000. So I've labeled that as diminishing returns. And then our final scenario is there are two variations to this final scenario. So number one, the price rises into a launchpad zone. We expect it's about to take off, and then it doesn't. Our scenario B, we never make it to a launchpad. Perhaps we struggle at the most important trend line is in crypto. We may eventually break it, but we just don't head up to where we expect to go to. We have to keep this scenario in mind. Now, this would most likely be lengthening cycles and diminishing returns. This is the work from Benjamin Cohen. You can go and have a look at it. He is suggesting that we potentially won't see a new all-time high this year, and that we're in a bear market within a bull market, and that what we're doing is a long consolidation, and then sometime in the middle towards or the end of next year that we head up and make our all-time high and put in the cycle peak. And his predictions are around $100,000 for the cycle peak. Okay, so what does that all mean? Hopefully that gives us some clarity as to what we might expect. Obviously, we can't cover every single eventuality, but I believe with those scenarios, it does give us a really clear structure to be looking for. As we start to tick off these boxes, it should become more evident which one we're following. Because of course, if we head up to 80, 120,000 in the next month or two, we're probably not seeing lengthening cycles and diminishing returns. That would be breaking that model. So what does this mean for us? Well, I've already pointed out that I'm seeing a very, very key moment, and that is once we have had, I'll use 2017 as an example. So in 2017, we came out of the mid-cycle shakeout, new all-time high, let's call it $100,000, and then we have our final correction before the run to the cycle peak. Now, if we are putting in the halving model and a run to the cycle peak this year, this bounce has to be very, very quick, and we need to make the all-time high very, very quickly. You know, maximum a couple of weeks from the low. You wouldn't be expecting to be hanging around for months around the low like we did in the mid-cycle shakeout. If so, that's probably looking like the KS model. No protracted recovery and no immediate all-time high. And if we make a new all-time high straight away, we have a lot of momentum, of course. We're coming out the final dip really, really hot, and probably price is going to spike up very, very high, whether that's 200, 250, 300 or more. So we'll be looking at that price action at that time. Is there any way that we can modify our strategy depending on that? Well, there is only one possible way of doing that, in my opinion. And that is when we are heading up to our $80,000 to $120,000 range, then to be taking some profits off the table. Now, I must say, it's not something that I recommend, because price is going to be moving so quickly. It is possible that you do that at $80,000 and we head straight up to $150,000, and then you'll be very, very disappointed. But, you know, of course, if you get it right, if you take some off the table at $100,000, we have this dip when we're expecting, and you can see how we're coming out of that. If it turns out that we are sort of rolling over and coming back down, then it looks like that is either the high, or we're coming in and we're going to do a KS model and bounce again into next year. But what I believe is the best approach, or at least the approach that I would recommend for most people, is simply that you're waiting for a parabolic blow off top. And the reason why I believe that really comes down to the fundamentals of Bitcoin at the end of the day. Bitcoin has a 1% adoption across the world, perhaps 1.5%. It's where the internet was in the late 1990s. Added to the fact that in the past 2 cycles, or 3 cycles if you include the half one at the beginning, we've had a blow off top. So I would be following the model until it breaks. And these parabolic blow off tops happen very, very quickly. You know, really it happened in the last couple of weeks. And if you miss it, you're missing the vast majority of the gains. So I would be, if you end up selling out of your position here, then and you miss this, then you've missed the opportunity of a lifetime, potentially. I expect us to see a parabolic blow off top, whether that happens late this year or into next year and it's looking like the KS model. I'm not expecting diminishing returns. Of course, it can happen, which is why we have it included on our flowchart, and we have it in our awareness that it may happen. And is there any action if we end up just not really following any of our scenarios and even not launching or not even making it into the launchpad zone? Well, in my opinion, no. I think at that point we become hodlers, and we become hodlers until we get that blow off top, whether that happened in 2022, 2023, 2024, 2025. I truly believe that we're going to see it. I believe we're going to see it this year, but of course, everything is on the table. Holding onto Bitcoin for the long term is the best solution for everybody. All that we're doing with our work And all that we're preparing for is if the market becomes so incredibly overheated, like it did in 2017, if this happens, this is obviously a unsustainable move. That's why we have the bear market afterwards. And like we did in 2013, which was even more pronounced, all that we're looking to do with our work is, if that happens, we're looking to take advantage of it to get more Bitcoin. Because of course, if you manage to take some profits around the top and then reinvest around the bear market low, then you're going to end up with more Bitcoin than if you don't do it in the first place. Otherwise, I believe that trying to overtrade and buy and sell too much and trying to time the market is ultimately a losing game, because you're trying to time and buy and sell such an emerging asset class and technology. It's extremely, extremely volatile. And you may actually end up missing out and losing Bitcoin compared to what you may have had previously. So it's all about keeping it simple. I'm only doing this work to prepare us mentally for what is about to happen, so that if a different scenario starts playing out, we can be very, very conscious of what is happening and not panic sell and not make any mistakes. So I'm not advocating trying to dip in and out of certain strategies. Make it very, very clear, because I think there was some confusion last time. Our base case has not changed and will not change until the model breaks. And that is, I didn't do this very well. Let me, okay, can't do that. This would have been easy. Our base case is that the halving model is playing out. And I was even looking again at the halving tracker earlier today. Let's zoom in a little bit on the halving tracker. Something that has served us very well up until now. And look at the bounce that we're having off of the shakeout low. And look at how that aligns with the bounce that we had in 2017. So if we're here, and this is lining up like the peak lined up here, like the peak lined up here, and like the low lined up there, then what we could be looking at is 2.5 months into the cycle peak, into a parabolic blow off top. And at that point, looking to take some profits, taking advantage of the greed and euphoria in the market, and then reinvesting at the bear market low, which will end up, of course, giving us more Bitcoin. If something else plays out, it's good that we're mentally prepared. But if we don't see that parabolic blow off top, I would caution against taking some profits off the table. If we just head up gradually, almost forever, we just start going past 100,000, 200,000, 300,000 over a number of years, to me, that just indicates that Bitcoin is maturing, the halving cycle is broken, but is just going to keep going up forever, which is programmed. So if you've got an asset which is appreciating in value because of a fixed supply of 21 million, compared to what you would be selling it for, which is fiat currency, which is being debased and going down in value over time, then it doesn't make any sense to sell it. So only if we get this blow off top, I believe, is the right time to sell some. Easier said than done. We will be tracking it. We'll be trying to see exactly where we are, and we'll be doing that together. Thank you for supporting, and I'll talk to you soon.